So welcome today to Build Credit to Your Advantage. We're going to be talking about all things related to credit, building credit, managing credit, monitoring credit. And so hopefully we'll give you some tools and tips to help you better manage your credit for all kinds of things that impact your life. My name is Andrea Pellegrini, and I run the Student Money Management Center for the University of Illinois System. And I am joined today by my colleagues, Kathy Sweedler and Kamaya Wallace-Bashard from Illinois Extension. Kathy, do you want to introduce yourself?
Thank you. This is Kathy, and I am looking forward to talking about credit today. I work with University of Illinois Extension, doing public presentations in the communities around personal finance.
And Kamaya, would you like to introduce yourself?
Absolutely. Hi, everyone. I'm Kamaya Wallace-Bashard. I am the Assistant Director for Diversity, Equity, and Inclusion with University of Illinois Extension. In my previous role, I served as a consumer economics educator. So I'm happy to be on for today's presentation and to be working with Kathy and Andrea, because I have been working with the Get Savvy team for almost 5 years. So I'm excited for this presentation. I know, like with my change in role in Extension, that has been wonderful, but I'm happy to be back on with the Get Savvy team.
And we're happy to have you back and to have such knowledgeable co-facilitators for today's webinar. So collectively, the Get Savvy team represents organizations across the state of Illinois, which rests on the land of multiple Native nations, including the Peoria, the Kaskaskia, the Piankashaw, Waya, Miami, Mascoutin, Ottawa, Sauk, Meskwaki, Kickapoo, Potawatomi, Ojibwe, and Chickasha nations. And we have a responsibility to work with these Native nations and move forward towards a vibrant and inclusive society. And with that in mind, I'm going to hand it back over to my colleague, Kamaya, I believe.
Yes.
Talk about learning objectives. Thank you, Kamaya.
Yeah, we have a few things for you today, but our overarching goal is to discuss ways to practice positive credit behaviors. We're going to explore just ways that you can build like healthy credit history, understanding how you can improve your credit scores, and then also looking to see some of the impacts that it might have on your life. And always, we would love to provide additional resources for you. So we're going to be identifying some resources that can help build credit towards your advantage. Now, the chat is warmed up a little bit, so let's keep it going. So our first a question to you, if you would like to share with us, tell us who lends money to people. So who comes to mind when you think of who lends money to people? Please go ahead and share that in the chat with us. I see family. Yes, I see that. Banks, credit unions, lots of banks coming up. Friends. Yes, there are times when that's a payday lenders. Parents. Yeah, these are some of the folks that do lend money. So when it comes to lending money, there are a lot of players involved, lots of people, lots of organizations and companies that do lend money. So thank you for sharing that with us. I see federal and I also see auto dealers. So as we move into talking more about credit, we love to start with the basics. And this is because we know that people have different information when it comes to credit. And so we always like to provide some clarification just as we're getting started to share all the great information that you came on for. So when we think about the basics of credit, what is credit? For the purpose of today's presentation, though, we are going to be looking at all kinds of borrowing, so not just on credit card. That is a very popular one, and people usually have a lot of questions about that. But when it comes to borrowing and understanding what credit is, when people borrow money from a company or from a person, they borrow it so that they have money to use today and so that they can pay that back in the future. So the main goal of credit is to have that money for today, even though you will need to pay that back in the future. And usually you're paying that paying that back with a cost. So that cost, of course, is what we call that interest. So just to warm up a little bit, to talk a little bit about what credit is. And so also too, when we talk about credit, we have to talk about like the credit system and how that works. Because again, here's another area where we get a lot of different information on, right? So when it comes to the credit system in the United States, it's very complex. And so when we look at how we try to track like our borrowing behaviors, and trying to see like what information might be available to us and to companies, and what information that companies share amongst each other. When it comes to like the credit basics, we look to see that, companies gather like your information, so your payment history. So when you go into an agreement with them, they're gathering all that information, so your payment history. And so once they have that information together, they might use the servicer. And in this context, the servicer is like a company or organization that is assigned to handling like the billing and other services on behalf of the lender. And so when the company sends that information to like the three major credit bureaus, the credit bureau has that information that they put together in what we call like your credit records or your credit reports. So we'll talk a lot more about credit reports and scores. And from your credit reports, you are assigned a number based on different algorithm called like your credit scores. And we know that is usually represented by a 3-digit number. So with your credit scores, this is how others, other lenders in the system, they look at all this information that was compiled on you to decide if they want to lend to you. So for like that continuous process of a company collecting your information, and then that information gets moved along the channel, and that information is used to determine your credit worthiness. So that's just some of the basics about what credit is and what the credit system looks like. I'm sure some of you already have like some great knowledge on that, but this is a really wonderful graphic to share with you. Now, I mentioned like the 3 credit bureaus. So when we're talking about like the credit bureaus, there are 3 major ones that are federally regulated. So the credit reporting companies, also known as like these bureaus, they're the ones that compile your information and might sell that your credit reports to like these companies. So the main ones, and we're familiar with like these names, are Equifax, Experian, and TransUnion. And again, when it comes to like these credit companies, they maintain separate reports because they're separate companies, they're competing companies. So they may not share the same information with each other, but typically you have like similar information in all 3 of them. So when it comes to like these bureaus, as I mentioned before, they are federally regulated. So you as a consumer, you have a right to obtain like your free copy of your credit report each year from like these 3 major competing bureaus. So we'll talk more about them, and you hear the names over and over as we go throughout the presentation. All right, so I mentioned the credit report, right? So in the system where that credit report falls from like the credit bureaus, but what is actually in it? What does it contain, and why does this matter to us? Why are we talking about this, right? So when we talk about credit score, we're talking about a record or a profile of your credit history. Lenders use your credit report to learn how you have handled your obligations in the past. So did you pay things on time? Are there anything reported against you? What are some of the things that they might highlight and might see within your credit report? So your credit report has like your personal identifiable information. They have like your public record information and any information related to like collection agencies. And within like that personal identifiable information, you'll find things like your name, your date of birth, your social security, and employment history. And then within like the public record information, you'll see things like bankruptcies, foreclosures, like those types of things that are included in like the public record. You will see those on your credit report as well. So lots of different things that might be in your credit report, but there are others, right? There are other things that are included in your credit report. So in addition to that, those personal information, things relating to public records and collections, there are also information on, what credit accounts you have and how you have used those. So again, going back to like whether you're making payments on time, whether you have late payments, all of those are included in like your credit report. So there are also things that we want you to make note of, because this is very interested in terms of, what information you want to check when you go in to make sure that you are seeing like accurate information that does represent you. So within your credit report, again, it can show if you've made any like late payments. So the information that way can stay on your credit report for up to like 7 years, except for bankruptcies that may stay on for longer, which is about 10 years. So when you go in to check those reports, making sure that you're paying attention to see if you are seeing anything on there. Now, the other thing that I want to highlight, for negative things that may stay on for 7 to 10 years, there are also student loans. So if you default on your student loan, that can stay on your report indefinitely. So with your student loans, making sure that, for payments, trying to make payments on time and paying attention to what is going on within your credit report. This is where we are emphasizing that you do check to see if all the information listed is accurate. So you can stay on top of things that might change within your reports, but wanted to just highlight those few pieces there. Now, when we're thinking about building like for healthy credit habits, of course, the theme of today, how we manage our money that we borrow, that can affect like our credit scores, it can affect our credit reports. And so that can also affect our abilities to do a lot of other things. So not just, obtain new credit, but other things that we want to do, the things that we desire in our lives, our goals, and the things that we're working towards. So as we look at the effects that credit may have on your life, it is also important to know that lenders will evaluate, again, your report and your scores to see what you have done and decide how they might do that. And since paying your debt is so closely related to like paying bills, others besides our creditors and lenders are now interested in like our reports and to seeing, what her payment histories have been look like. So things like obtaining the cost of a loan, that again, based on like our history and what we've been doing, that could affect like the rate that we get for our loans. It could also affect like renting an apartment. So, for landlords, they might want to see, what was your situation like in your previous apartment? What were your payment history like to determine whether or not they would like to rent to you. It can also affect other things relating to like obtaining the job. And in some states that it might be different in different states. And Illinois has like different laws around that as well too, where an employer might be able to review your credit report, especially if you are going into a position that is focused on managing a budget or managing money for different amounts. So it's some other things that it might affect, again, going back to like interest rates, it could be the cost that you pay for your auto or life insurance. It could also affect your ability to, the access that you have to utilities. Another important thing that I think I want to highlight here as well, for people starting, whether it's like small business, family business, thinking about like how your personal history may affect like your potential to obtain like different loans. And I know within our last Get Savvy presentation, Steve Bob did a wonderful job focusing on like small business, small loans. So if you didn't get a chance to go back to watch that, please do so. But in terms of trying to obtain like your own business, just making sure that with your due diligence, with focusing on your personal history to see how you have managed like your credit in the past, that could affect, other possibilities for obtaining like a business loan in the future. All right, so we're on this theme, right? Because we're on a theme of building healthy credit and building that to your advantage. So what are some things that are important as we think about that? And another important healthy habit in building your credit is knowing like our responsibilities. So what are the things that we are responsible for versus what the lender might be responsible for? And knowing that we have like our own personal due diligence to keep in mind that we need to know what we can afford. So what money do I have coming in each month? What's my income? What money do I have going out? What are my expenses? So what are the things that I am earning and paying on, and how am I able to balance what I am borrowing? So making sure that I can pay back what I'm borrowing, paying it back on time, paying it back in full. So to see what other, lines of credit I might have open. It's also important to understand, what are the things that are our needs or desires. So those things that we value, and making sure that as we're planning on obtaining credit, we're thinking about ways that we can maximize on our dreams, but also taking care of like the responsibilities that we do have. The other piece with like your personal due diligence is to make sure that you are providing up-to-date and accurate information. So did you move to a new address over the last few months? Did you change your name? So what are some things that we need to update and keep on file so that in our communication with our lenders, with our creditors, they have this up-to-date information. Another big part of our responsibilities is maintaining those contracts, right? So this is a contractual agreement between you and the lender saying, here's what I'm lending you, and you're going to be paying me back this much each month with the interest, of course, included. So making sure that you understand like the terms of the loan. And this can be hard too, especially depending on what type of loan it is. It's a lot of information for you to digest and to remember. So making sure that you're going back if you need to check things to say, wait, why did it look like I'm paying a little bit more this month? So going back in your contract to see what changes they've made and staying up to date on any communication that they might send to you so that you're not surprised by changes that might occur, or if you have questions about changes that might occur, you have their contact information to just follow up and find out more. The other piece in here when it comes to borrower responsibility, and I'm going to go into a little bit more detail in this, is when you're a co-signer, knowing that you are responsible for the full repayment of the loan if the person who you're co-signing with decides not to repay that loan. So a co-signer, just like, of course, the co-signer is a borrower as well, too, because they are taking on that full responsibility of that loan. So if the borrower defaults or stop making payments on that loan, the co-signer is responsible for those monthly payments. And what that do to somebody is that it might affect their ability to borrow in the future. And that can affect like some of the dreams that they have. And we know that people co-sign on loans for a number of reasons. Sometimes it's to help others to improve their credit. Sometimes it is a loved one who will benefit from you helping to show the lender that there is another party that is attached to this loan, who is responsible, who's had a good credit history, who can help this person build their own credit worthiness. So when it comes to like these responsibilities, just understanding that as a co-signer, there's a lot involved in that, and making sure that you're understanding what the terms of the loans are, and you are going into an agreement with somebody that you do trust and know and understand that if something happens and there are missed payments, that you are responsible for that. All right, so with that, I am going to pause there and I am going to pass it over to Kathy.
Thank you, Kamaya, for giving us such a great overview on kind of the credit system in the U.S. and reminding everybody about their responsibilities as a borrower. And that really sets us up well to start thinking about habits to build our credit. And, the reason that we talk about building a credit history is that having a strong credit history reflected by your credit report and your credit scores can help you achieve different financial goals and dreams that are important to you. So as we go through today's webinar, and we're talking about these different strategies from check your credit report all the way down to pay down your debt, then I really encourage you to be thinking about what are my financial goals right now, and how would implementing these different strategies help me move closer to achieving those financial goals. So we're going to start out by taking a look at one of those myths that's out there that is related to checking your credit report. And as we were building this presentation, we thought, really the first thing to building a positive credit history is to check your credit report and understand what's in there. So what I'd like to do now is launch this poll. And I can launch that. Hold on. And my question to you is, Jesse wants to buy a house. That's their personal goal. And they check their credit report to see if there are any errors in the report. Do you think that looking at their credit report will make their credit score go up, go down, or stay the same? And it looks like great. We're getting lots of participation here. You should, hopefully we'll see this poll just popping up in front of you and we can get these answers in. Oh, great. This is good. It's going along quickly. Couple more seconds. Any more votes? All right. I'm going to go ahead and share this. And most of you said that it will stay the same. And that is true. So when you look at your own credit report, it will not affect it. It will not go up and it won't go down, although there is a lot of misinformation out there. And many people do think that it'll go down. You're protected. You can look at it, and you want to look at it because you want to make sure that it's accurate. Most people, when they check their credit report, especially the first time, are going to find mistakes. And those mistakes could negatively affect you by lowering your credit score. So you definitely want to check them and make sure that it's clear. Now, when you're checking your credit report, you can do it for free if you go to annualcreditreport.com and you want to check each of the 3 different credit reports from Equifax, Experian, and TransUnion. Because as Kamaya said, these are competing businesses and they do not share data with each other. Lots of data flows in, but sometimes something gets reported to one or not the others. And so you could have different information on the different 3 reports. So you are guaranteed by the federal law that you can check your reports for free at least once a year. Currently, you can check them pretty much as often as you want, but that was something that went into effect during the pandemic. We don't know how long that's going to continue, but at least check them now. And then think about checking them regularly moving forward. It's just a really important way to make sure that things stay up to date and that you're not getting bad data being introduced. So our number 1 strategy for building credit is check your credit report. Now, what do you do if you find mistakes? First off, when you're checking these online, the bureaus often have a way right there online where you can just click a little button and say, I dispute this fact. And then you have a place to write information, like, I paid off this debt in such and such date. And then that will go into that credit reporting company system and they'll check on it and they will get it corrected. Sometimes they'll come back to you and say, you need to show me, for example, that you have the closing documents that say you paid off this loan. Please send a copy, and always only send copies. Do not send your originals, please. Sometimes you'll also need to go and dispute the error with the company who provided the information. So if the credit bureau reporting company checks and they're like, well, that's the information we got, it seems to be accurate, then you need to go back to the company who provided the information and get it corrected there, and then it'll get reported to the credit company. But you can make these corrections, and it is important to do it. And one of the reasons we ask you to check your credit reports regularly is it might take a little bit of time to fix mistakes if you have to go back and forth with documents and such. And so you don't want to be doing it the night before you apply for a loan. You want to get that all cleaned up in advance, or at least stay on top of it. Now, keep in mind that just because it's information you don't like or it seems negative, if it's accurate, it's going to stay on your report. But sometimes there are reasons why something happened, and you can put a note into your file that will give you a chance to explain the situation or explain what happened. And so that's another strategy you can use. And if you see that there is data about a collection debt that's been paid off, a debt that went to collection and you've now paid it off, you can request the credit bureaus to remove it. All right, so just to talk a little bit more about this myth that we had about when checking your own credit history, that's considered a soft inquiry. So when you check your report, or when a company is just kind of saying, we just want to do some marketing. And so we're going to look at reports of people, in this neighborhood to see who we want to send our marketing to. Those types of things will not influence your credit score. But if you have initiated a contact, so you're out asking for a loan, or you have done, initiated something that would trigger a credit report with a business, then that is considered a hard inquiry. And so those kinds of hard inquiries that can affect your credit score, it typically takes a few, not just one. And so one of the important things to keep in mind is that if you focus your hard inquiries into a short amount of time, then it can help you with comparison shopping. So let's see if we can apply that a little bit to Stevie. Stevie needs to buy a car. That's their financial goal. And they're looking at how can they go ahead and find the best car loan. And they don't want to hurt the credit score. They want to make sure they're going to get the best APR they can on their loan. So what's their best strategy? Should they just accept the loan that's offered by the car dealership? Should they apply for a car loan monthly, like once a month for several months to find the best interest rate? Or apply and compare the car loans within 2 to 4 weeks and choose the best? And what I'm seeing as, let's see, we're getting these polls in. We're doing great here. Fabulous. Give everybody a few more seconds to choose those different options. What's the best way to get the best interest rate, the best annual percentage rate? Okay, looks like we've got just about all. I'm going to close this out and share it. Hey, you guys did a fabulous job on this. People were listening carefully. The best way is to compare car loans. We want you to shop around because the interest rates on loans may be different from different lenders, but do it within 2 to 4 weeks so that it just counts as one hard inquiry instead of being many over time. And that will be the way to keep your credit score up as much as possible. All right. Remember, if you have any questions as we go along here, things that I'm not saying clearly, you want clarified, please put them in the chat. I can see that people are ready to respond there. All right, we've been throwing around these words, credit reports, credit scores. Let's back up for a second and make sure that we have a definite understanding about the differences and just re-emphasize. So your credit reports, or as Kamaya introduced, are compiled mostly by these 3 big bureaus. They have lots of data. By the time you're moving on in your financial life, you could have pages of data that shows your credit history and how you use them. We've talked about it's important to, check those, make sure all that data is correct. And you want to make sure that by doing that, not only does it make sure your count is accurate, but one other thing I forgot to mention is that it can help stop identity theft. I'm not sure it helps prevent it, but it can definitely help stop it. And that is that if somebody is using your name and your identity to take out loans or do other borrowing, it'll show up on your credit report, and it might show up there before you have any other clues. And so that's something to look for. And as we said, you're going to request that for free at annualcreditreport.com. Now, credit scores are a number that companies like FICO take all this data, run it through a mathematical formula, and get a number that is typically between 300 and 850. And this is a number that lenders and landlords use, because it's faster than going through all the data. They can just look at that number. Now, we do not have a place as consumers that we're guaranteed to be able to get this for free. FICO and Vantage and other credit scoring companies sell these scores. They sell them to lenders, they sell them to landlords, and they can sell them to you. But we do have sometimes some resources where it allows us to have check our score for free. Some credit cards offer this, some insurance companies offer you a monthly update to your credit score. that is great. And that's a great way not to have to spend money on it. But do keep in mind that whether you pay for it or you get it from one of these free sources, it could be a different credit score than what a lender gets. For one thing, your data changes daily. For another thing, there's different formulas out there. There's different companies. They could be pulling the data from one of those three reports and they could be different. So lots of ways where it could be slightly different. But these free resources are a good way to kind of monitor if anything major is changing your score in a big way. And then you'd want to dig into your report to figure out why. All right, let's do another poll. All right, so what about in this situation, who is likely to receive the lower APR for their car loan, Charlie or Stevie? And they have kind of a different approach to their finances. Charlie likes to pay cash for all expenses. They do have emergency saving and they work full time. Now, in contrast, Stevie, they have a low revolving balance on their credit card. They never pay it really fully off, but they keep it pretty low, makes those payments on time and works for full time. Who do you think is likely to get the lower APR for their car loan? It looks like as I've been talking, everybody's been voting, which is what I wanted. Thank you. And we'll see if we get a couple more here. All right, let's end that poll and we'll share the results. So most of you did choose Stevie. And the reason is that Stevie has been using credit regularly, and it shows up in their credit history that they use it and they make payments on time. Charlie hasn't really is not doing anything wrong with their finances, but they do not have that credit history because they're paying everything with cash. And so they may not have a credit score, or they just may not have a very strong credit score. And so without some debt, you probably don't have any credit score. And so this is something to consider as you're making financial decisions about how you want to manage your own financial life. All right, so what if you're denied credit? If you're denied credit, you will get a letter. So let's say that Charlie applied, he got turned down for a car loan, then he will get a letter that says which credit bureau was used in the lending decision. And then you're legally entitled to a free copy of your report, even if you just pulled a report. And then you can take a look at seeing what's going on in that report to give you an idea about why you might have been denied. The other thing is that instead of going to annualcreditreport.com for these reports, in this situation, you contact the credit bureau directly, and that information will all be in that letter. Okay, seems like a good place for me to pause and turn it over to Kamaya.
Thank you, Kathy. So we're moving on to number 2 as we're looking at ways to build your credit. So the other one that we're going to focus on is, use credit regularly. And we're going to start out by jumping into an example with Sally. So Sally is 75 years old, has paid off her car and house loans. Sally prefers to write checks rather than use a credit card for purchases. Her credit score has gone down because she has not been using credit regularly. So Sally's life sounds wonderful. She's doing a lot of great things, right? Paying things off, paying things down. But why should Sally care about credit? Even though she's doing so great, why should she care about credit? I would love to hear from you in the chat. So again, we've been using this chat, and thank you all for your participation. If you have some ideas, throw it out there. Why should Sally, who has paid off her car and house loans, why should she care about the fact that, her credit score has gone down a little bit? Let us know. All right, I got one from Kathy. It may affect future financial opportunities, such as co-signing on loans for family members. Yes. So as Sally is making like a lot of great decisions in her life, the choice not to use credit, again, affects like her credit score. But what if things change for Sally a little bit? If Sally, say, for example, has a grandchild that they want to help to put through school, and Sally's trying to co-sign on that loan, that might be reflected there as well, too. All right, I see some other things that are coming back. It is an option for future use. Thank you, Donna, for larger purchases if needed. Yes, very true. Thank you for sharing these. Yes, I see in emergency situations. So lots of different things with like life changes and why this might matter to Sally. So there are a couple of the things that, of course, you have been saying that I want to just emphasize. Just remembering that credit scores affect more than just borrowing money, right? So doing other things in life, it can affect all those. So to maintain a credit score, you need to use that credit regularly. So when you do not, of course, use credit regularly, that can affect like your overall score each month. So wonderful things that Sally is doing. But I would encourage Sally to, every once in a while, use like her credit card, then pay that off in full, pay it back on time, just to maintain like those activities on there. Yes, great answers and great share in the chat. Thank you for participating in that. Now, as we're talking about credit and we're talking about building healthy credit, we have to address the issue that there are a lot of people in this country that are considered credit invisible. So according to the data that we have, 2 in 10 consumers do not have a conventional credit score, meaning they do not have enough data in their credit history to produce a credit score. So what this means is for a portion of our population, there are people who do not have enough information in like their credit history to have a credit report with any of those 3 major bureaus that we just mentioned. And this, of course, could be for a number of reasons. But I would also like to highlight just some of the disparities as to why some people might not have like those readable or enough information within like their credit scores. So there are some disparities when it comes to like being credit invisible. So we know that credit invisibility is mostly impacted underserved communities. So with like 26% of Hispanic consumers and 28% of Black consumers have like unscorable or just considered credit invisible because they do not have like that information in there. And I have done like webinars on, credit fairness or access to fair credit, which focus on like why some of these disparities might exist, but just knowing that when it comes to being credit invisible, there are a large portion of the population that is affected by this. And there are reasons in terms of like some of the disparities that we see, but we also know that it might be choice and how people choose to manage their financial life. So we'll talk more about that as well too. So even though there are disparities and reasons that we see, we also know that people are making the choice as to how they use credit and if they use credit. But before I go into that, I'm going to talk a little bit about secured credit cards. So as we're talking about different ways to build credit, a secured credit card is a type of credit card that can be an effective tool to help to build or reestablish credit. So reestablishing like your credit history. So when it comes to like your secured credit card, it usually has like different stipulation than for unsecured credit cards, which are some of the typical ones that we might be familiar with. When it comes to secured credit cards, it requires that you do deposit money in an account as collateral. So say, for example, you have somebody who is starting out. I'm from an immigrant family, and I believe I've shared this before on Get Savvy webinars. And a lot of my family who migrated to the United States, even people in their 30s or 40s, they're establishing credit. And so they've worked with like banks to obtain secured credit cards where they have that account where they put, say, $500 in as collateral to say if they don't pay this back, then they might lose that money. So what the secured credit card does, it really does help with having this person to build their credit. So they put that deposit in, and that equals to like the limit on the card. So they use it as a regular credit card, because of course you use it as a regular credit card. It's just the fact that they're is that collateral that is on there. And what that does, it slowly helps to establish a credit history. So if you are going in and you're putting purchases on your secured credit card, there's a track record of what you have been doing. You've been paying things online. And that, of course, provides like that credibility to say, yes, this person is using credit and they are using credit healthily. So when it comes to secure credit card as well too, you should always have questions, when you're going into it, just to understand if you decide that a secured credit card is the way to go to either build or reestablish credit, that the information of your payments will be reported to like the credit bureau. So you should be asking questions relating to that. You should also be asking questions about like the interest rate, what fees that you might be charged, what grace period that you have in case, a mispayment. So something terrible happens, we're human, our lives are not set in stone with like the things that we might experience. So just asking questions to see like what fees and what changes might be made and how this might benefit you. But an important piece too, because it's a tool for building credit, is it being reported that yes, I am using credit and it is going towards my credit history. The other tool that I'm going to mention here is like a secured personal loan. So a secured personal loan lets you borrow money against an asset again. So against like a savings account. And when it comes to like these secured personal loan, they are just like with your secured credit card, they are backed by collateral. And sometimes they're called credit builder loans. So an important piece with this, it is a tool that can help with establishing like that credit history. And with like both of these tools, with a secured credit card and your personal loan, again, doing like your due diligence to ask the important questions about fees, ask the question relating to repayment and how this might help you as you're working towards building your future and building your credit. The next piece I want to add on here as I'm talking about like, secured loans and secured personal loans. Kathy and I did a podcast on piggybacking on credit. So adding like an authorized user to like your credit information. So becoming an authorized user is also another tool or technique for slowly building credit. Piggybacking, as they call it in the literature. This occurs when an individual becomes an authorized user on an account that the sole purpose of being that person on that account, where there's a primary person, is to help improve the credit history. So you have the primary card holder, and then you might have somebody who is going to be that authorized user on the card. That will benefit from that. It's a slow way to help build credit, but it's also another tool. And yeah, Kathy and I deep dive into this last year. We had fun, writing blog articles and doing a podcast about that. So that information will be shared in the chat in case you are wondering about that. Another tool that helps us with building credit is our student loans. And I'm going to tell another story because when I first came to the United States, I was a college student, so I was an international student, and I started learning more about student loans and how student loan work. And then I realized that once I took out and started repaying student loans, that it was helping me build a credit history. So when it comes to like student loan, you don't necessarily have like an established history already, but it can contribute towards building your credit history. Some important things to think about in here is when it comes to like your student loans, just understanding a little bit about the fact that how we borrow and how we repay will affect our overall credit history. So I want to highlight a couple points on here. So when it comes to, say, for example, subsidized student loans when there's no interest until you graduate, just understanding that based on like your student status and when you leave school, so what that repayment process is going to be like. And if you do not repay like those during the time that it needs to be repaid, it can affect, again, your credit history and your credit report. But when it comes to student loans, one of the things that I really like to highlight Just like with any other type of credit, knowing what you need, like how much you need and how you're going to be able to pay that back. So there are different times-based, different requirements when you're in school versus when you're not in school. And I know Get Savvy has done some wonderful jobs on student loan webinars before, but just understanding like the timelines for repayment, when you need to repay things, and making sure that you are making those payments back and just taking out what you actually need, because non-payments or defaults or late payments, all of those can affect like our credit history. So it could be a tool for helping to build credit, but just being very, very careful about how we go about making sure that we are making those payments back when they need to be made, and we're doing those on time. So I know that the pause is still until December 31st, right, Andrea? I'm putting Andrea on the spot.
Yes, it is still until the 31st. So the repayment for federal loans will restart in January as of right now. We know it's been extended several times. I think we're pretty sure it will not be extended again. But I just put in the chat that Nikki and I will be co-presenting 2 different student loan repayment and management webinars in the spring. So you can sign up for those as well.
Thank you, Andrea. So yes, great tool. We're going to pay attention to when things need to be repaid, and check out Nikki's and Andrea's webinars because they are fabulous. My other thing that I'm going to mention here, which is what I kind of hinted towards, right? So when we're talking about credit invisible, when we're talking about credit use, we also have to emphasize that when it comes to credit and credit use, it is your choice, right? It is your choice to choose whether or not you choose to use credit. And we understand that people have different experiences and backgrounds that have affected how they have managed credit in the past and how they continue or choose to move going forward. So when it comes to managing credit, you know, with all that we've said, just making sure that you are making decisions that work for you. And if you decide to use credit and how you're using credit, you can manage it that works for you. So even a lot of people who might be debt or credit averse and they're maybe on the fence about whether or not to use credit, there are techniques that you can use. And we've mentioned some too with, you know, paying your credit card off every month, paying it on time. So you're not really paying like the monthly fee on those. But whether or not you choose to use credit, our big advice to you, and Kathy has said this, and I've said this, you please still check your credit report. What that does, it helps you again to see what is going on there and to see if there are any red flags for things that may not relate to you. All right. I'm going to hand it back over to Kathy.
Wonderful. All right, so moving on, we're going to go back and talk a little bit more about that FICO score. And what do you think is the most important factor in a FICO score calculation? The amount of debt, the amount in your retirement account, the number of years of credit use, or your regular payment history? And I see the answers coming in, and this all kind of, you know, as when people are getting their votes in here. Let's see. All right, I think we got it. I'm gonna go ahead and end this and share this. And actually, the answer here is regular payment history. This is the big one. And so that leads us to our third point of strategies for building credit history, which is make your payments on time. So we talked about check your credit report. We've talked about using credit regularly. And now we're talking about make your payments on time. And one little hint, if you do have one of those student loans that we're talking about, if you put your payments on automatic, it'll make it so your payments are on time. You won't have to worry about it. And it might even save you a little bit in your interest rate. Now, when we take a look at the information that FICO gives us, they give us this little diagram that shows the payment history makes up 35% of your credit score. Now, this is just over a quick overview, but it gives you a sense of why we think this is important. There's a lot of little things that go into it, like whether you've gotten new credit recently, whether you have a nice mix of credit, revolving credit, as well as like loans for homes or cars, and your length of credit history. But the important thing here is just to that there's two things that make the most difference: payment history and amounts owed, which we'll get to. Now, FICO's not the only one that has produces a credit score. Right now, the other company that's coming into play is Vantage Scores. Now, FICO is still used by at least 90% of the lenders, but we are seeing some market share gathering by the Vantage, so we wanted to bring this up. And as you can see, they both basically emphasize the same things. They may reclassify things a little bit in their categories, but payment history is the biggest one for both of these scores. And that is really the main takeaway as we kind of watch how this plays out in the next few years in terms of market share. At least we know that the same things are important. And I also want to remind you that lenders consider more than the credit scores. So when you go to apply for a car loan or a business loan or a home mortgage, they're looking at things like, what's your capacity to pay back these loans? Are you creditworthy? Are you likely to pay them back? Those things are somewhat measured by your credit score, but there may be also looking at the assets that you have. Do you have backup in your income that you can pay these things? Are you employed? So all these things do come into a kind of consideration when you are applying for a loan. If you want to know more about credit scores, because we're clearly running out of time here anyway, but there's so much to talk about, I'd like to point you towards a recent podcast from Making Sense of Money. It's about credit scores. It's episode 51. And I think this would be a great place to learn some more about it. Our fourth strategy for building your credit history is pay down debt. And if you remember from that FICO score, that was the next largest thing, was that lenders and credit scores are concerned about how much debt are you already carrying when you go to take out more debt. And there's different ways that lenders might look at this above and beyond the credit scores. They may take a look at how much debt to income do you have. Remember, the more debt you have, the less flexibility you have in your spending. And if something changes in your income, like you get your hours reduced or somebody loses their job, the more difficult it's going to be to make those debt payments. So you really need to decide yourself, what can you comfortably afford on your own and not just depend on lenders to decide that. And keep in mind that yes, you get to use those products and services now when you borrow to buy, but you will have to pay them off with future income. All right. And then the next area is credit utilization. This is another kind of way to measure what you're doing with your debt. So it takes a look at how much credit you're using, how much you've borrowed physically, in reality, not just a line, over the total amount of credit available. So they'll make, for example, let's say that Jade had a credit limit of $1,000, then she would have maybe borrowed and charged $600. Okay, so she'd have a 60% credit utilization ratio. Both the FICO and the Vantage scores seem to be saying that they prefer, or you get better scores when you are keeping your credit utilization ratio below 30%. Now, that may not always be achievable by everybody, but it's something to keep in mind. Now, when we're looking at this, two ways to get that credit utilization ratio to move. One is to pay down your debt. That will have less debt in the top piece of that. Now, keep in mind, too, that the total amount credit available could mean that if you close credit cards, you'll have less credit available, and that could have an adverse effect on this credit utilization ratio. I don't think you should really necessarily be focusing on just, doing things just to improve your credit utilization ratio. I think you also need to look at your personal financial goals and also what works best for you in your money management strategies in your own life. But I do want you to understand the interplay that goes on between what your credit lines are and how much credit you're using. So that gets us to an important point. If you are planning to take out a large loan, you may not want to make drastic credit changes right before applying for something big. So doing things like getting lots of new credit cards or making big purchases on your credit for things maybe you don't need right at this moment, or closing lines of credit, all of these could affect your credit score in a way that would make it that so that you don't get quite as good of an annual percentage rate on, say, a long-term loan like a mortgage. So keep these things in mind as you're planning out your personal financial goals and actions. We're not going to have a lot of time, really, any to talk about debt repayment strategies, but we do have a webinar on that and that Kamaya and I have done. And so it's called What's Your Best Debt Repayment Strategy? So putting that out there in the resources. All right, handing it back to Kamaya to wrap this up.
All right, we have 2 minutes. Thank you all who have remained on. I know your time is valuable. So just to wrap up, some of the important things that we focused on as we're looking at, how do you build your credit? How do you build healthy credit over time? Checking your credit report. We've said that over and over. That is such an important aspect of that. Making sure that you do use credit regularly. We use our example of Sally. Making payments on time. We know that that's a huge part of how we are evaluated, I would say, for credit worthiness, and then making sure that you are paying down your debt and you are paying that down on time. The last poll that we have for you is to just ask, because we just like to gauge those of you who have remained on with us. When was the last time you checked your credit report? If you could launch that poll for me, Kathy, it'll be great. Or Andrea. All right, so when was the last time you checked your credit report? In the past couple of months, at least 6 months ago, sometime last year, some years ago, never or not sure? Let us know. I'll take just a couple seconds there. I still have you for another minute. Thanks for hanging on with us. I will go ahead and end the poll. Okay. All right, so it looks like for most people, it's around the past couple of months and at least 6 months ago. All right, thank you very much for sharing that. To close out, why we ask you these questions too, and trying to gauge that from you, is what are some of the next steps or some of the things that you can do on your own as you're working towards either building or reestablishing credit, or even if you have good credit, but you're on good credit history and that type of relationship, but you're on with us today to learn more, making sure that you pull your credit report, come up with a plan of your own. We know that people use credit in different ways. Some people are more credit and debt averse, so they might try to avoid using credit. But what would work for you that gives you a balance and a peace of mind, right? What gives you a peace of mind in how you are handling your credit? So come up with a plan that's going to work for you. We have, we have like additional resources that we would like to provide for you. Some of them already have been in the chat. But my last thing on here is our upcoming webinar. So our upcoming webinar is a very fun one on spend less, travel more. I love our travel ones because, with a lot of people traveling more, even though the pandemic is not gone, but lots of people are traveling still. And so we're going to be focused in on some really great tools and opportunities that you can use to save on travel costs and things that are going to benefit you as you're planning like your next trip, your next adventure. There are a couple other things on here, our webinar that have been recorded already. You can have access to those for Get Savvy webinar. The links are in the chat. And you can stay in contact with us. Our contact information are on here, like all the Get Savvy partners. So for those who are able to stay on, and if you have questions, please let us know. With that, I will pause and see if Andrea or Kathy has anything else to add.
I think you did a great job. This is Andrea. So thank you. For any of you that are waiting, we're recording this. So if someone asked a question that you had as well, we will keep the answers to any questions that we find in the chat on the recording that we'll send out in the next week or so. I had a couple questions privately in the chat about specific slide numbers or slides At the very beginning, Ramya shared the link to the slides. So Ramya, if you can share again that link at the very top of our resource list to these slides to make them available, I think that will be helpful for everyone. We'll also include a link to the PDF of the slides as well as the recording once we have those available if you registered. So make sure that you have registered for today's webinar so we can make sure to get you all the information that you need, including all the links that Ramya has been sharing in the chat. The other thing that I wanted to just briefly talk about, because we went relatively quickly through it, is federal student loans impact on your credit history and credit reports. There's been some recent legislative changes and some rulemaking changes and even state laws regarding credit and student loan history and defaults. And even if you owe money to your university or college and leave school, and what the consequences of that are. So there's some less significant impacts overall to your credit history due to student loan repayment. However, you still need to pay attention to it, and it's unclear right now what the future will hold for impacts for borrowers still owing a balance on their student loans and needing to repay in the future. So everything can shift when it comes to student loans.
However, paying your debt, student loan debt regularly and on time, I believe, is still considered a positive in all situations.
Yes, absolutely.
So
Absolutely.
there's a good way to build credit history if you have a student loan. Any other questions? I know there was, a question about looking at slides, but I think actually being able to download them and look at them yourself is probably the best way to handle that. And that is now in the chat. Otherwise, thank you everybody for joining us. I know there were some things we went over quickly, but hopefully you caught it all. And if you have questions in the future, don't hesitate to reach out to us.
All right, I don't see any new questions, probably because credit is such a complicated topic. It is a shifting topic as well. So continuing to educate yourself on credit and its impacts and the best ways to manage it is kind of a lifelong learning possibility. So just continue to stay engaged. And if you have questions, you can reach out to studentmoney@uillinois.edu and we can try to answer your questions. Or we've shared information for all of our partners in the chat as well. So thank you again and have a fabulous rest of your day.